What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today, BTC USD. It is the 6th day of June. Here we are at about $61,000. We've got, it says a day and 11 hours left in this week, but it's more like a day and 10 and a half hours left in this week. Hit that like button, subscribe. Thank you all for being here. 10 and a half hours left in this day, the 6th of June. And we are breaking through this trend line. I'm drawing this not because I think it's significant, but I'm drawing this because a lot of people are drawing this. And maybe it's here, wherever the case, whatever the case may be. Maybe, I feel like it'd be most appropriate to probably connect the dots to these lows with those lows. I don't know. I don't think the trend line matters. We've broken through it before. If you want to pull it back even further, there's other trend lines you can take. Let's see. We've broken through this trend line here. We broke through that during the last bear market. You guys remember how devastating that was? Think about this just real quick. And this is actually, I'm glad that I actually just did this. This is the main point of what I'm trying to get to here. Is that imagine all the people here who thought, oh God, Bitcoin's done. It's never going to recover now. That was literally the bear market low, guys. And we moved up, right? Now hold on, wait. It's not just that one time, but we've done this before. What about here? What about right there? Oh God. Oh God, guys. Oh no. Bitcoin's done. It's never going to recover. Right? You hear what I'm saying? In fact, it's at that point where you get below these trend lines that typically the bear market's over. And we're getting there. We're there now, technically. We probably have a little bit lower to go. The 200-week moving average, damn it, why isn't it? It should be on here. I've got it, but let's just see. The 200-week moving average is something a lot of people are paying attention to as well right now and saying that, oh, we're below the 200-week, time to buy. That's fine. Buy here. Not financial advice, not a financial advisor. You could have bought 83K anywhere in this range, and in 4 years from now, you're going to be a genius. You're going to feel really good about it. There's no wrong time to buy Bitcoin right now, especially here. But you look at the last bear market, and we went significantly below the 200K, the 200-week moving average. Here, we went significantly below it. Here, we at least crowded this area for quite some time. So my main point that I'm trying to address here is that, sure, this might be the most optimal low of the bear market to buy. And it is right now. Technically, it is. But likely we go lower. And even if we don't go lower, likely we hang out here for quite some time. Bear markets do not end like this. They don't end like this, and then we pump. They end with a bit of a bang, and then a whimper. A bit of a bang, and then a whimper. And we're actually going to go over why this was a shorter whimper than some of the other ones. A bit of a bang, and then a whimper. Some of these whimpers are more volatile, bigger ranges. Some of them are tighter. Some of them are tighter. Now, here, this bear market was very boring. For a long time, it was very boring. And it got so boring for so long. And then finally, you saw some excitement. Here, it was a little bit of a faster pace, and then you had the boring, the predominant part of that boring was at the end. Here, again, a bit of a faster pace. There were some moments it was boring, but most of the boring was at the end here. In our current bear market, it hasn't really been a boring bear market at all. We had moments of being bored, but it's been a pretty fast-paced bear market so far. Therefore, yes, I think the boring phase is going to be the determinant end of the bear market. It'll be something that goes a little bit lower. We'll move up. Everybody will think we're in a bull market, or maybe not everybody will think we're in a bull market, but people will get excited. And then down here, we'll move back down. Everyone's going to think that we're going to go lower, but we won't. We'll just kind of be range bound, doing our thing, throwing people off. And then as time goes on, it'll be time-based capitulation that brings forth the next bull cycle, not price-based capitulation, though the price-based capitulation will help. At least that's my theory. That's my theory, backed in quite literally what we've seen historically happening here. I'm going to get rid of the white line. We don't need any white lines. Okay, it's the morning time. Here we are, $60,800, basically $61,000. I want to look at the short-term stuff. We're going to flip into the Binance chart. We're going to get on with our bad selves. The 1 hour time frame here. By the way, actually, real quick on the weekly time frame. Is it the weekly? Maybe it's the daily. I'm thinking of a different chart. Never mind. 1 hour time frame. 1 hour time frame. We've been moving down. Volume has been increasing as we've been moving down. And now volume is starting to taper off as we are moving lower. That means we're probably coming to an end. Don't take my word for it. Don't just look at the volume and the price action, but look at this, or I guess look at the price action by itself. You can see you're starting to round off a little bit. You can go lower. We could go lower than this low and still move up. But again, as I said here, as I said here, as I said here, as I'm saying now, we're either at the low or we're very near the low. I made a bullish post on X talking about how this is the zone to buy, and then we dropped. We went from like 63K down to 59K, and somebody was like, haha, you were wrong. Oh God, you got me. Yeah, we were bearish from 77K. You can go back and check my YouTube channel back on the 26th of May. We were bearish from 77K, and we got bullish down here. Oh God, so wrong. I don't know how I'm gonna live. I need to get a day job. 1 hour time frame here. Looking at the RSI, we've got higher lows coming in. We've got a flat top here at the 50. Looks like we're going to break out to the upside. It looks like an ascending triangle there. You're definitely seeing some divergence taking place on the RSI. Stochastics are moving up. They're kind of weird, but so is the price action. I wouldn't say this is bullish. It's probably more bearish than bullish, but whatever. The MACD is definitely more bearish than bullish. We are building some bullish momentum at the moment. 4 hour time frame. We do have some bullish divergence playing out. We have some bullish divergence on the stochastics and bullish divergence on the RSI. Here's my thought. When you reject the RSI's oversold zone, that's not good. Okay? But this rejection here was really not that bad. We only went from 61.1K to 59.1K. That really wasn't that big of a jump down. Volume even came in at lower levels here. And now we're grinding the oversold zone. Now we're back up here and we're grinding it. We haven't dropped down yet. I think one of two things is going to happen. Either one, we see a slightly lower low and we further this divergence just a little bit, a slightly lower low. It might not even be a lower low. Maybe it's a higher low in the price, but a lower low on a closing basis, something like that. But then soon enough, so first thing, either we get the lower low and then we recover, or number two, we just recover right now. And likely that recovery, if I had to guess, it will take us somewhere between 66K, 67K to maybe something that's just above 70K, something in that kind of area. A little bit of a move up that could take place over the next week or two. It can take some time and we will move up. We look at this on the daily time frame. And Bitcoin right now, if it closes here or lower, will have closed 1, 2, 3, 4, 5, 6. This will be the 7th red day in a row that Bitcoin is closed. And if it closes red, cool. If not, we've got 6 red days, whatever. It's still a long iteration of daily closes that have been red in a row. And if we look here, the last time Bitcoin closed 7 red candles in a row or more was in May of 2023. We saw a 10% move up from there in about 2.5 weeks. That was this move, right? No, that's the 20% move. 10% move there. So we moved sideways. Here was the low, moved sideways. Then we moved up. We did go lower. We still went lower. But this was the 23rd of May, or this was in May 2023, so this was in the beginning phases of the last bull market. The time before that, we saw 7 red days close was in June of 2022, and we pumped 20%. And this is what it looked like. We found our low, big drop. Actually, 1, 2, 3, 4, 5, 6, 7. We had a big drop here too, actually. And then we pumped up a little bit there as well. That was probably like a 10 or 15% pump in a day right there, actually. But whenever we had, this was that last time before where we saw 7 red days in a row close there. We moved up 20% in about a week and a half, something like that. This was like a 6-day period, actually, where it moved up. So Bitcoin, just because it moved up 10% and 20% the last 2 times that we saw this many red candles in a row, doesn't mean it has to do that now. But if we imagine from a low that we move up 10%, we imagine from a low that we move up 17 or 20%. Sorry, I don't know where 17 came from. Yeah, it's 71.7K. That's 65K, somewhere in that area. Let's put some lines there. Some white lines right there, and then we're going to delete the noise, make it clean it up, and then we'll throw some fibs on. Okay, daily time frame from the high, the 83K high, to the low here that was just yesterday, the 5th of June. Neither of these lines really make sense. The thing that makes the most sense, at least to me, well, okay. First off, actually, this first white line makes a little bit of sense because you're interacting with prior support here, prior support there. That does make a little bit of sense, but it doesn't make sense to me in the sense of the fibs. It wouldn't make sense that you come up here and stop there and then go lower. It can happen. It does happen, but statistically speaking, you'd be more likely to either reject the 236 or go up to the 382 at least. So maybe something that's a little bit higher than 65K. I would think 67K to 70K, that seems like an appropriate minimum expectation. 67 to 70K. We're at 60.7K now. Over the next week or two, at a minimum, I expect we will be worth 67 to 70K. And people will probably get very excited here. It'll be an obvious lower high, whatever. Maybe we see something more exuberant than that and we go up 20%. Now, again, this is kind of odd. We're at prior areas of resistance, and that makes sense. Prior resistance here, prior resistance there, prior support right there. That part makes sense to me. What doesn't make sense is the fib part, where we'd be right here in between the 0.5 and the golden ratio. It doesn't make sense to me in that sense. So I would say formally that something between 67K and 74K is our target area, with the likelihood that we don't even get above 70K or too much above 70K. Statistically, it would be improbable. It's less probable that we go to 73 to 74.6K, that we hit this golden ratio, but it can happen. It can happen. And again, we're talking about a 2-week process. It could be a little bit less than 2 weeks, a little bit more than 2 weeks, but something probably going into the end of the month of June. I don't expect that as soon as we get up here that it's just going to be plummeting through the floor. We're probably going to tease people. It'll be, it'll seem like we're going to move up, and then eventually you start to show your hand and then things pick up. This could be the end of the bear market. This is what I think is going to be the end of the bear market, is this later part of July or sometime in August. I've been sticking with August. I've stuck with August since March. That's been the call, is that we would find our bear market low in August. Maybe it's July. Maybe it's October. Maybe it's September. However it works. But the point being is that when we do find our bear market low, it's not go time from that moment. We might see some initial recovery, but likely we're going to see a range bound sidewaysness. And this is where I actually want to end the video, is the talk of being range bound. Again, we've gone over this at length for the last, I think, 3 or 4 days. When we were oversold here in the RSI, and we're oversold now, we're even more oversold now. When we were oversold here, these are the times throughout the bear market, right, since the bear market beginning, October 6th, that we've been oversold deeply in the RSI. When we were oversold here, what did we do? We moved sideways. We were range bound. From November, we didn't break out until January. Late January. Really the beginning of February is when we broke out. Late January. From late November to late January. It's 2 months. A little bit over 2 months. Here, when we were oversold, what did we do? We were range bound. Range bound. And we didn't break out. Well, this was February. We didn't break out until May. Beginning of February to May. February, March, April, May, 3 months, 2 to 3 months. Here, it's quite possible that for at least a month, if not 2 to 3 months or more, we will be moving sideways. We will be range bound before we kick off that next step. Now, I think that the bear market low is going to be in August or late July, so that gives you an idea of what my frame of reference for time is with this consolidation phase, but I could be wrong. It could be longer. I could be wrong. We could get this finale done with right now. But I don't suspect that we go below 50K. I do suspect that we hold 50K as support. Probably 50 to 55K is where we're going to go. If we go below 50K, it's not the end of the world. We could do it. But I mean, anybody who's calling for prices that are below 40K, I mean, really even below like 49K, it's just hard for me to wrap my head around. Just because it's hard for me to wrap my head around doesn't mean it can't happen. But I don't know what else to say. Stochastics have been oversold for a little while. Similar. Just look at the readings, man. Look at the readings. Look at how very similar all of this is. We crossed below the zero here in the MACD, right? Our oscillators were right here. They're right here now. They're right here now. Our histogram is basically the same level that it was. Look at this. Histogram here, it's basically the same level it was here. From the low point here, it's literally the same level it was here. The oscillators are lower here, but they're basically at the same level here as they are now. Stochastics look the same. RSI is very similar as well. The volume spikes, everything about this right here tells me, at least expresses that we are either at or very near a relative low point. And whenever I say relative low point, I don't mean it's the bear market low, it's time to get going, we're going to party. Maybe, but more so that we're just going to consolidate, and then likely from there we're going to go lower. And mark my words, what's going to happen if we do that? What's going to happen is people will compare us to the last cycle, because that's logical to do, right? Look at the past, see if you can compare it to this current situation, and see if you get anything out of that. The past, we moved sideways. We were in a consolidation range for a while. Then we had a sharp drop where we went barely below the low, and that was the end of the bear market. We started to move up afterwards. Well, we moved sideways for a little bit, but then we moved up afterwards. So my assumption would be that from here, we hit this, we consolidated for a while, then we went lower and we found a slightly lower low. If we move sideways here, everybody's going to expect that to be the end of the bear market. We move up, then we'll move lower. Then capitulation really sets in. Then it upsets the narrative people built in their heads. And then that's whenever everybody sells, when there's no more bulls left, that'll be when we move up. Bulls need to get slaughtered. They've definitely gotten slaughtered. People were very excited here, but there's still a lot of hope in the market, at least from what I've seen. Don't get me wrong. You go on X.com right now, people are sad, people are depressed. There's definitely that out there. Of course, we just dropped a lot. But everybody's trying to call for the low. Everybody right now is trying to call for the bear market low. It's when people stop doing that we're at the bear market low. It's whenever people say, all right, we might find support here, but we're going to go lower, expect 40K, 50K, and there's people that are saying that, don't get me wrong. But it's not prominent enough, at least not in my opinion. Maybe I'm in my own echo chamber of hope, but I myself am not even hopeful. I myself have a rather pessimistic outlook on the crypto markets right now. So I don't know. I think time is what's needed. I think time is needed more than price action. And I don't care. This could be the bear market low. It's completely possible. But if that's the case, we will have time to figure that out. It'll be more obvious in time. It's less obvious now. I think it's too early to call this the low. I don't think it's too early to call it a relative low, and expect some volatility here before we see slightly lower prices. I got nothing else, guys. I'm just talking at this point, so I'm going to end the video there. Hit the like button, subscribe. Thank you all. Weekly time frame. RSI is getting oversold. There might be people who are calling for this to be bullish divergence, but it's not. It's actually technically not bullish divergence anymore. Stochastics are pretty far away from each other. The MACD on the weekly time frame is looking like it wants to cross red. I think that we're in this finale phase, but we got a little bit more to go, man. A little bit more. Just a little bit more. Where are we relative to this fib here? You would think that we'd show some significance. 382. Perfect. 56K. Yeah. There's our bear market low. 56 and just below there. It's very common on the 382 to wick just below there. Yeah. So this, statistically speaking, is a magnet right now. There's a very low probability that we find support anywhere above this line. There's a very high probability that we at least touch it, if not go a little bit below it. Yeah, super high. And then, man, you throw the low to high here, and that 1272 is right there. It's perfect. It's literally. What about this one? Do we have any fibs that line up here? I wouldn't be surprised. Golden ratio right there at 54. I mean, it just all makes sense, man. 54, 56.6K. We're going to refine it. I'm going to be very refined here. I'm going to, instead of 50 to 55K, which is already refined enough, and we've been saying that since 80K, okay? Even since 83K, we've been saying 50 to 55K. Now that we're here at 61K, I'm going to refine it. I'm going to say 55 to 54K. It's a very tight range. 55 to 54K. That's going to be the bear market low. And then also in the future, gift of foresight, people will start to call this a head and shoulders pattern, and they'll be marking out way lower prices. It's just not going to happen. We're gonna bust through that in time. But I wouldn't be surprised if we saw consolidation like this on the opposite end to really give this head and shoulders pattern some vividness, to make it seem like it's real. Theories on theories. Hit the like button if you like them. Subscribe if you love them. If you hate them, leave me a scathing comment of truth and honesty and not of arrogance, please. I will see you on the next one. Take care. Bye-bye.